US markets witnessed another positive session on Friday as key indices finished the week with gains, and the S&P 500 notched its 14th record close. The Asian markets are mixed ahead of the US-China trade talk scheduled for later today, while the GIFT Nifty is indicating a muted start for our own markets. Crude oil prices eased to a 3-week low as talks between the US and China take place in Stockholm. Gold prices, meanwhile, fall ahead of the US Federal Reserve meet this week. The United States and the European Union have reached a trade deal which will see a blanket tariff of 15% on all European Union goods imported to the US. This comes after Commerce Secretary Howard Lutnick confirmed that there will be no extensions to the looming tariff deadlines on the 1st of August. TCS will lay off 12,000 employees over the next year, and this will impact about 2% of its global workforce, primarily in the middle and senior grades. CEO K. Krithivasan described the decision as one of the toughest that he has faced, but called it necessary to build a stronger, future-ready company. And on the earnings front, Kotak Mahindra Bank reported its June quarter numbers over the weekend. The bank's net profit missed street expectations, while its net interest income also rose 6% on a year-on-year basis. Well, if all the weekend headlines are anything to go by, this promises to be nothing but an action-packed start to what is an extremely earnings-heavy and data-heavy week, not just in India, but across the globe as well. We'll tell you all about that on Power Breakfast right here on CNBC TV 18 in the Mumbai News Centre. I am Hormuz Patakia. Let's first take a look at how the Asian markets have started off in today's trade. It's a fairly mixed picture, but slightly in the green as we speak of all-important US and China trade talks taking place in Stockholm later today and tomorrow. The Hang Seng currently trading 0.4% higher. The Taiwanese index too trading with gains of a similar quantum, and the rest of the markets too. The peripheral markets doing fairly okay for themselves. The Nikkei is down around 0.7%. It was an outperformer last week. The Kospi too trading below the flat line. Of course, the Kospi has been a big outperformer this year already. So mixed picture coming in from the Asian indices, and pull up the GIFT Nifty as well. And after 4 straight weekly losses, it is yet another subdued start, but below the flat line is what the implied open is currently suggesting. A 17-point downtick so far, which is around about that 24,800 mark, which is a very important level for the index. Now, Wall Street on Friday, for lack of directional cues all through last week, and the indices continued to move higher. And of course, they were backed by some very strong corporate earnings. The Dow was up over 200 points. The S&P 500 gained around 0.4%. Another close above the 6,300 mark, so a record high for the S&P 500, which is the 14th time it has closed at a record high this year. Now, for the week, the major averages finished with gains of well over 1% each, and the US futures are also trading with gains this morning after the European Union and the US announced a trade deal, and of course ahead of the all-important US Fed meet outcome later this week. Also in focus, of course, this week is going to be the 1st August tariff deadline that US President Donald Trump has announced. Along with it, there is some inflation data, there is some jobs data that will be reported on Friday. The GDP data comes out, so it's a very important macro-heavy data. And not to forget, big tech comes out with results this week. Apple, Amazon, and a lot of other companies will be reporting results today. But that's all the global market action. How will all of these overnight cues impact our own markets? Our research team joins in with the trade setup, the stocks that are likely to be in the news as well. You know, it was, as we mentioned, right, it was 4 straight weekly losses now for the Nifty, and there has been a lack of positive cues to take the index higher. And over the last 4 weeks, this 4-week losing streak that we have had, the Nifty is now down 3% during this week. What are some of these triggers that are keeping the markets jittery? The disappointing earnings that the IT sector has come out with. The mid-cap and the small-cap earnings, there have been on both sides. Reactions have been on both sides. The good earnings have been disproportionately rewarded, but the bad ones, the ones that have marginally missed expectations, they have been smashed. And IT, as we mentioned, right, the IT index is down 9% in the last last 3 weeks itself. It continues to remain in focus today as well after the TCS announcement that came in last evening, and that will have a bearing on the entire sector going forward. There is a tariff deadline that is nearing. Japan has signed a deal. The European Union has signed a deal. We are still awaiting clarity on what happens to our deal, and every recovery that the indices are seeing is getting sold into. So as of now, we closed below the 50 DMA last week, but that is an important level to watch out for as well. What are some of the key triggers this week? Of course, we come out with auto sector comes out with numbers today. Defense companies come out with numbers this week. The defense companies have seen a very sharp run up. We saw results from Zen Technologies over the weekend. Any progress on the trade front that takes place. Auto sales data comes out on Friday. The PMI numbers come out on Friday. The Fed decision, and all the global decisions that we just spoke about, these are the important triggers for the market. Today itself, there are some important results. Look at BEL, IndusInd Bank, Masgao Dock, GAIL, UPL. So a slew of Nifty and broader market results that will be reported today. Among the key levels, we've broken below the 50 DMA, so now it brings you to the June 24th low, which is 24,824. That comes into play on the downside. The index made an intraday low of 24,802 on Friday, and we closed above that level. And below that 24,800 mark, the June 13th low of 24,703, that comes into play as well for the index. The Nifty Bank, despite the resilience shown by HDFC Bank and ICICI Bank, is still down 1,000 points from the record high that it had made earlier this month. And of course, the last week's low of 56,255 is an important level to watch out for on the Nifty Bank. So for now, a subdued start is what the GIFT Nifty is indicating. We'll watch out for any further developments over the course of what promises to be an action-packed day. Over to Upasana now, who will list out the stocks that you need to keep an eye out for. It's a long list. Upasana, good morning.
Good morning. First up, let me start with Kotak Bank. The weakness is seen in companies' asset quality as well as NIMs. Now, coming to NII, it saw a growth of about 6% on a one-web basis, while GNPAs, they surged by 6 basis points at 1.48% sequentially. Next up is Bank of Baroda. Overall mixed set of numbers. The net profit was up about 2%, while NII was down nearly about 1.4%. Petronet LNG also reported their numbers, volumes ahead of estimates, but overall it's a miss on EBITDA. Revenue down about 3.5%, operating margins stood at 9.7% versus 12.2% sequentially. SAIL reported numbers which were below our poll estimates. Revenue up about 8%, margins stood at 10.6% versus the poll of 13.3%. SBI Cards also reported their Q1 numbers. The net profit was down about 6.4%, while NII was up about 14%. Tata Chem reported decent set of numbers, but the commentary overall remains weak. Revenue down about 1.8% on a one-web basis, while PAT was up about 66% at 316 crores on a one-web basis. Sona Comstar shareholders approved Priya Sachdev Kapoor's appointment as a non-executive director with 99% votes in her favor. Lot of stocks also in focus on the back of the order win. First up is BEL. The company bags order worth 2,000 crores from Ministry of Defence for air defence fire control radars for Indian Army. Next is RITES, also in focus, as the company receives letter of award from BEL worth nearly about 177 crores. And lastly, VA Tech Vibhag, also in focus, as company secures 380 crore order from Bangalore Water Supply and Sewage Board for facilities in Bengaluru. So all in all, lots of stocks on our radar today, and we'll be closely watching out for all of them.
Lots of stocks indeed. Upasana, thanks a lot for that update. And lastly, Mangalam joins in with cues from the F&O space. So Mangalam, a forgettable week again for the bulls, but what's the F&O data indicating?
Well, there was a fair amount of weakness that we saw on Friday as well. The Nifty actually ended virtually at the lower end of the trading range. And we saw the Nifty Bank, the mid-cap index, all of them. If you look at the broader markets, we had nearly 5 stocks in the red for every stock that gained. And that would have your portfolios bleeding a fair amount. What was actually interesting was the way the India VIX spiked as well. Remember, the India VIX before this was at very low levels of close to around 10, 10.5. That was factoring in complacency. Now that's out. We have a 5% spike out there. The cash market flows, the FIs and the DIIs, both of them sold in the cash market. The FIs sold about 2,000 crores. The domestic institutional investors went ahead and bought about 2,100 crores. But that's not all. The FIs have been continuously selling in cash as well as index futures. So those sold about 2,500 crores. And added 1,000 longs, but 14,000 short contracts is what they've added. So what does that mean? Their net contracts are now down to 1.6 lakh on the short side, with longs just at 14% and 86% exposure on the short side. Not only did they sell in cash and index futures, they also sold index calls in expiry weeks. So if you look at the option selling, 1.5 lakh short calls were initiated as against just 60,000 short puts, telling you that on the way up there is stiff resistance. Where is that resistance? Active options tell you 25,000 call and 24,900 call, both of them fairly active in trade, telling you between 25,000 and 25,050 there is stiff resistance that the market is expecting. And technically as well, that ties in because you have, the 50-day moving average, which is a resistance, or the Nifty 25,056, a mark that we broke on Friday's trading session. But speaking about the 50-day moving average, for the Nifty Bank, the 50-day moving average can prove to be a bit of a support. And in terms of support, we have the 24,850 put, which is equally active, along with the 24,700 put, telling you closer to around 24,750 to 24,600. We will see some support for the market. The key is for us to hold onto the lows. 24,800 has been an important support. We've bounced back a couple of times in the last month itself from these levels between 24,800 and 24,900. The put-call ratio at 0.7 tells you that there could be some support at lower levels and there might be a bit of a ban. The one stock that I'm talking out for looking out for today is IEX. That stock ended about 10% higher and then has exited F&O ban.
Keep an eye out on IEX. Of course, Jeffries earlier this morning has also cut its price target now to 105. With the stock now out of the ban, interesting to see how it moves today. Mangalam, thank you for that update. Moving on, the big announcement from yesterday was TCS, and it has announced that it will be cutting its workforce by over 2% over the course of this year. Rima is joining in with the rationale and the impact of this. Rima, big announcement from TCS.
Oh, indeed, a very big one. TCS is India's largest IT company, a bellwether. And I think it's the first time in my memory that an Indian IT company, particularly TCS, has gone ahead and cut its workforce. So let's first get the numbers in. 2% of its workforce, and that is approximately 12,000. Who will be impacted? It's the mid and senior level employees, and this will happen over the course of FY26 this year. Now, the company says this move is triggered because the company needs to be a future-ready organization. It's not about AI, it's not about demand, it's basically about a skill set mismatch. And this is what they had to say about, this is what Kriti had to say to Money Control. This is not about AI giving 20% productivity gains. This is driven by where there is a skill mismatch, where we think we've not been able to deploy someone. It's not because we need lesser people. We will continue to look for high quality talent. So basically, for some time now, TCS has been reskilling its employees and redeploying them. But there are some instances, some employees where this redeployment was not possible. And those, employees have been given the pink slip. So the basic reason is a demand skill mismatch in an AI age, but we can't forget that demand is also slowing down. Things have been tough for the industry for over a year now, and as your headcount shrinks, you need fewer managers to manage those programmers. So that's also there. There's been pressure on margin, so all that is hurting. In fact, you're seeing this silently. In the last 2 years, I was just checking, IT companies are pretty much, their headcount is down. For TCS, the headcount over 2 years now, which also factors into the post-COVID boom. Headcount is down by nearly 2,200 employees. For Infosys, 12,500. For Wipro, 25,000 employees, the headcount. That's the drop we've seen in the last 2 years. And also in the case of TCS, remember the company decided to defer the wage hikes for FY26. They said we kind of overhired in Q1, so we've deferred the wage hike. We're going to see how the situation plays out. So it's clear that the business model of Indian IT companies, where revenues were linear, they were dependent on the number of employees and you just build based on the billable hours, that is changing now, clearly. And the question now is, will other IT companies also follow suit?
Indeed, we'll keep an eye out on TCS and the entire sector as well. The IT sector has been a big underperformer over the last 3 weeks, ever since numbers have started to be reported. Rima, thank you for that update. On to earnings now, and Kotak Mahindra Bank was the big result that was announced over the weekend. Gaurav is joining in with the earnings fine print. Gaurav, good morning. How do the numbers look like?
Well, yes, when we talk about Kotak Mahindra Bank, we already saw a good set of numbers in terms of loan book growth. But when it comes to results, we are seeing some kind of disappointment. So let me take you through the numbers. Net interest income and pre-provisional operating profit both increased almost by 6% on a year-on-year basis. But the first disappointment came from net interest margins. Now they have declined almost by 32 basis points on a sequential basis, whereas the street was estimating around 20 basis point of fall. When management spoke, what they said is that this NIM fall is specific specifically because of the shift towards from unsecured to secured loan. And second is that the floating yields are actually falling, and that is the reason why they say that NIMs have fallen. In fact, what they have also said is that Q2 will be the quarter where we will see bottom out of NIMs, and from thereafter we will see NIMs actually stabilizing. Another disappointment was in terms of credit cost. Now that has increased almost by 30 basis points on a sequential basis. Here also the street was not expecting any kind of sharp spike in credit cost. In fact, they were expecting flattish credit cost for the quarter, and the reason what management has highlighted is that the stress in MFI and specifically because of the CV book. That is the reason why they said that credit cost has peaked out, and from here on we will see some kind of moderation in credit cost, but definitely that was disappointing, and as a result profit has declined almost by 7% on a year-on-year basis. In fact, when we talk about loan book growth, although the number looks very strong at 14%, but there is another thing to point out is that the loan book growth was specifically driven by the corporate banking, where we saw growth of around 11% on a sequential basis. Now let's not forget that corporate banking is something which gives lower NIMs, and that is the reason why there is some kind of pessimism here as well. So definitely in terms of number, weak set of number is what we saw from Kotak Bank in this quarter.
Indeed, we'll keep an eye out on Kotak Mahindra Bank as well. Gaurav, thank you for that update. Take a short break. We'll get you all the weekend developments from the White House in our segment Trump Watch on the other side. Stay tuned. Welcome back. And the big development from overnight, the US-European Union announcing a trade deal. That, along with all the other developments summarized in our segment Trump Watch. Dia is here with all the updates. Dia.
In a major breakthrough, the European Union and the United States have clinched a hard-fought tariff deal. Under the agreement, the EU will face a 15% tariff on most of its exports to the US, including automobiles. Now, the compromise averts a full-blown trade war that experts warn could have delivered a hammer blow to the global economy. Now, in what is the biggest trade deal ever, the EU will buy $750 billion worth of US energy products and invest $600 billion in the US. It is also expected to purchase hundreds of billions worth of military equipment from the US. Listen in to the bite.
We have good news. We've reached a deal. It's a good deal for everybody, I believe. And I think you were saying this is probably the biggest deal ever reached in any capacity, trade or beyond trade.
It is.
It's a giant deal with lots of countries, because, as you know, Ursula represents a lot of countries, not one country. It's not easy for you. It's because a lot of very different countries, great countries, but some are strong with cars, some are strong with agriculture, some are strong with both, right?
Staying with trade and diplomacy, UK Prime Minister Keir Starmer is set to meet US President Donald Trump in Scotland on Monday. Now, the leaders are expected to iron out the final obstacles to a UK-US trade deal and discuss efforts toward a lasting ceasefire in Gaza. Meanwhile, Washington is holding firm on its trade stance. The US has made it clear there will be no extensions to the looming tariff deadline. Commerce Secretary Howard Lutnick confirmed on Sunday that the August 1st deadline for imposing tariffs on trading partners is final, with no room for any kind of negotiations. Now, in Southeast Asia, tensions continue to simmer between Thailand and Cambodia following violent clashes earlier this week. President Trump says he has personally called the leaders of both countries, urging an immediate halt to the fighting. He also warned that no trade deals will either nation proceed until peace is restored. Now, talks between Thailand and Cambodia are now scheduled for today. That's all for today. Now, back to you, Hormaz.
Yeah, thank you for that update. And the US futures tracking these developments are currently trading with gains of around 150 to 160 points as we speak. Now, as the 1st August tariff deadline looms, the US and Chinese officials will meet again to discuss the trade framework in Sweden's capital Stockholm later today. China's Vice Premier and his team will meet with the US delegation led by Treasury Secretary Scott Bessent, while some political watchers say that these two sides could be working on an extension of their trade truce, which is set to expire on the 12th of August. Moving on then, let us also now listen into some market experts and economists who share their views on the tariffs and its impact on the US markets as that 1st August deadline draws closer.
You know, for all those who say that tariffs are disinflationary or deflationary, I have an issue with that because I'm seeing firsthand the cost, particularly in things like construction costs. You know, particularly if you're putting up a building, you need fabricated steel from anywhere but the U.S. And there are specialty companies outside the U.S. that specialize in that. You're seeing instant, you know, margin erosion on your projects. At least I certainly am. And you know, wages are also tough. I mean, they seem to be, you know, wages are sticky and moving up now, particularly for construction type jobs. You know, whether it's pipe fitting, electricians, roofing, windows, you name it. So I just don't see these inflation pressures dying away. I know everyone wants to go back to the days of zero rates, but I got to tell you, zero rates are not walking through that door anytime soon. And that's something that fixing investors have to get comfortable with and stop living in the past and thinking, oh, I'll just wait, you know, rates are going to go to zero again. They're not.
Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. It's been a news-heavy weekend, and we are heading into a news-heavy week. How are the commodities reacting at the start of the week?
Oh, absolutely, Hormuz. You know, the morning has been all about the U.S.-European Union trade agreement with 15% tariffs on European Union goods and nothing on U.S. And that's exactly what the street is working with. Having said that, the U.S. tariff agreements now with European Union, Japan, UK, Vietnam, Indonesia, Philippines, and on table you have China, Mexico, Canada, India, and other countries as well. So the street is, if you look at the industrial commodities, by the way, they have started the week on a stronger note. As you see more trade deals coming in, that takes away the tariff uncertainties off the table, and that would mean that the demand for many of these economies would start to come back. So we are looking at the crude oil prices off its 3-week lows. Remember, last week was 1 to 3% of a decline, but this week we've started on a slightly better note. Same is the case with the metals as well. Copper is slightly positive. Steel has continued to gain up as well. The safe haven commodities like gold or even the dollar index has seen a decline. Euro seems to be strengthening in today. So the high-yielding commodities, high-yielding currencies, industrial commodities, all of them have started Asia on a hopeful note.
Starting on a hopeful note, Manisha, thank you for that update for the commodities side. With that, we call time on this edition of Power Breakfast. But Bazaar Morning Call on the other side to set you up for what promises to be an action-packed day. Stay tuned.